Hello, traders, investors, and market enthusiasts. Welcome to your weekly market update. I'm Tolga, and we are here to break down the key market movements of last week and prepare you for the week ahead as we enter the last week of November 2024. So grab your coffee or tea and let's dive in. Last week, we saw a strong rebound in US stock indexes, with the Dow hitting a record high and the S&P 500 just 0.5% shy of its all-time peak. The Nasdaq remains competitive, sitting 1.5% below its highest close. This marked a sharp recovery after the previous week's losses. Bitcoin continued its impressive rally, reaching nearly $100,000, marking another record high for the third consecutive week. This reflects heightened interest and investment in digital currencies. Meanwhile, US small cap stocks took the lead, with the Russell 2000 index posting a sharp 4.5% weekly return, helped by continued momentum post-election. In terms of investment styles, large cap value stocks outperformed growth stocks, a trend that saw a 2.5% weekly gain compared to 1.7% for growth. Consumer sentiment took a modest hit post-election, slipping slightly as the University of Michigan's Consumer Sentiment Index fell from 73 to 71.8. Oil prices rebounded sharply by more than 6% after a significant dip the prior week, driven by rising geopolitical tensions, closing Friday above $71 per barrel. Corporate earnings remained robust as S&P 500 companies are on track to post a 5.8% year-over-year gain for Q3. Looking globally, Europe has struggled with disappointing PMI data, particularly impacting the euro and British pound, influenced by the stagnant growth and inflation worries. In the UK, the pound hit a 6-month low as rate cut expectations intensified. Gold saw a strong rally reminiscent of a safe haven surge, and analysts like those from Goldman Sachs project further gains. The Federal Reserve's recent decision to lower the federal funds rate to support economic growth indicates heightened sensitivity to the current economic outlook, with inflation nearing the 2% target. Australia's RBA maintained its cash rate, projecting inflation won't stabilize till 2026. Meanwhile, New Zealand's rate cut signals ongoing economic challenges with subdued economic growth prospects. The ECB and Bank of England are also in accommodative mode, with recent rate cuts designed to tackle inflation while fostering economic stabilization in their respective regions. Keep an eye on the dynamics in Japan, as economic indicators imply a moderate pace above potential growth, with the Bank of Japan adhering its ultra-accommodative policy settings. This coming week is a busy one, leading up to Thursday Thanksgiving holiday in the US. Monday's calendar includes Germany's IFO business climate data, followed by a series of significant US reports on Thursday, Fed meeting minutes, housing data, and consumer confidence. Wednesday is the standout day, crammed with a high-impact US releases, personal consumption expenditure, Q3 GDP second estimate, and durable goods orders will be watched closely for market clues. Friday sees an early close for US stock exchanges, with attention on global data releases such as Japan's industrial production and euro area inflation. Internationally, inflation figures from the euro area's key economies are in focus, along with GDP estimates and consumer confidence from major markets like Japan and Australia. In Canada, GDP growth figures for Q3 will be synchronized after the Bank of Canada's recent rate cuts aimed at stabilizing growth. Geopolitical tensions, particularly in the Middle East and Russia-Ukraine, remain key areas of uncertainty, potentially impacting energy prices and global market sentiment. As we head into a shortened but economically significant week, the financial world will be centered around US data inflows, geopolitical developments, and central bank activities. Historically, November ends with a bang for US stocks, often carrying into December's Santa rally. Will the pattern hold this year? If the S&P 500 continues its climb, it could be a gift for bulls heading into the holidays. Stay tuned as we bring you weekly updates and insights. Don't forget to subscribe, like, and comment below with your thoughts or questions. Thank you for tuning into our channel. We will catch you next week with more updates and analysis as we move into December. Until then, manage your portfolios wisely and take care.